Coming up on Market to Market, federal relief could be coming just in time for the holidays. Meatpacking managers are shown the door. One of the must-have items this Christmas is a tall tradition. And market analysis with Arlen Suderman. Next.
Sell that rally and
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, December 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. An early start to the holiday shopping season has yet to translate into bigger totals at the cash register. Retail sales for November dropped 1.1%, the biggest fall in 7 months. Foot traffic was dramatically lower on Black Friday in brick and mortar locations. New homes are still being built as the number of starts increased 1.2%, a third straight month of gains. The last time single-family units were built at this pace, 2007. The value of Iowa farmland showed an increase of 1.7% according to Iowa State University. The average price is estimated at $7,559 per acre. The strongest growth since 2013 in farmland values helped push the Rural Main Street Index back above growth neutral with a reading of 51.6. The big question in Washington over the last 2 weeks is when the 116th Congress will vote on Stimulus 2.0. As of Friday afternoon when this program was recorded, no vote on the measure had been taken. What's in and out at either end of Pennsylvania Avenue has varied, as John Torpy reports.
Legislators spent the week working to deliver a new coronavirus relief package and an omnibus spending bill just in time to miss some important deadlines.
Number one, we're not leaving here without a COVID package. It's not going to happen. We're going to stay here until we get a COVID package.
When it comes to unemployment benefits,
Packed with reluctant compromises, neither party is getting what they want. Democrats were unable to secure millions of dollars for state and local governments to offset global pandemic-related budget shortfalls, while GOP members let go of COVID-19 liability protections for businesses. The new relief package also includes $300 per week in unemployment insurance assistance and a $600 per person one-time stimulus payment.
we have a long way to go. But we can't think that the crisis is over. We need to pass COVID relief to help our fellow Americans get by until we eradicate this virus. We need to fully fund not only production of the vaccine, but its distribution as well. The states badly need that money, and we need to get it done for every American.
The aid package supplies rural America with $13 billion for rural communities, farmers, and laborers impacted by COVID-19. An additional $3 billion was included to help improve internet access for distance learning in low-income and rural communities. The congressional compromise also includes extending USDA's Emergency Food Assistance Program, or TFAP, as well as injecting much-needed funds into WIC, SNAP, and other programs that guard against food insecurity. For Market to Market, I'm John Torpy.
The nation's second largest packer is under increased scrutiny. The New York City comptroller wants the Securities and Exchange Commission to investigate whether meatpacking giant Tyson made misleading disclosures about the company's COVID-19 pandemic response. The company also is being sued over the wrongful death of one of its employees. And the company's own independent investigator confirmed findings about manager misconduct earlier this year. Peter Tubbs has more.
Tyson Foods announced the firing of 7 managers at its Waterloo, Iowa plant. An investigation found the managers reduced their time on the plant floor to avoid catching the virus from workers. Managers also left untrained employees to manage meat cutters and participated in a betting pool on the number of workers who would test positive for COVID-19. Over 1,000 of the plant's 2,800 workers contracted COVID-19 between March and May of 2020. Tyson has since installed barriers at workstations to limit the spread of the virus.
And may it please the court, counsel.
In the capital city of Des Moines, oral arguments on the validity of a 2019 lawsuit on Iowa water quality were heard by the Iowa Supreme Court this week. Iowa Citizens for Community Improvement has sued the state of Iowa over state policy exempting agriculture from water pollution rules. ICCI believes the voluntary terms of the Nutrient Reduction Act, which passed the Iowa legislature in 2018, violates the Iowa Constitution. The focus of the suit is the Raccoon River watershed, which ICCI maintains is not available for use by the citizens of Iowa due to high nitrate levels in the water. The nitrates are believed to be from runoff from agricultural fields and from manure of animal feeding operations.
This is about vindicating the public's right to clean water, about ensuring that the state is protecting the recreational use, the drinking water use of an important water body within Iowa for the benefit of Iowans. That's what the public trust doctrine is. That's what it has always been. And the state is violating its duty to protect this right to clean water.
The Raccoon River supplies the drinking water for over 500,000 people in central Iowa. At certain times of the year, nitrate levels in the river exceed safe levels for drinking water and must be removed. The state was asking for the suit to be dismissed on the grounds that ICCI does not have standing in the case and that their argument is too broad.
This idea that the aesthetic, the recreation, and drinking is paramount to any other use that Iowa or Iowans might use the waterways and surface water for, I think is, kind of presumes too much.
If the Iowa Supreme Court upholds the lower court ruling that ICCI has standing in the case, the suit returns to district court in Des Moines. For Market to Market, I'm Peter Tubbs.
The family Christmas tree has proven to be a very expensive add to the living room this season. In Hong Kong, 8-foot noble firs are selling for more than $2,000 each, while the less desirable Charlie Brown-inspired versions are flying out of the lot. Domestically, producers received an early holiday gift that was years in the making. Colleen Bradford Krantz tells us more in this week's cover story.
By mid-year, 2020 was looking bleak for many Christmas tree farms. The country was nearly shut down thanks to the coronavirus disease, COVID-19. And tree growers in several regions were also dealing with drought. Things were rough. It didn't matter if you were growing your evergreens in Voluntown, Connecticut.
We were hit with a major drought this year. We lost a lot of small, fresh, new plantings all the way up until even plantings that were 3 years ago were affected.
Or in Minburn, Iowa.
We were probably about 7 to 8 inches short by mid to late summer. I did try to water my new seedlings that I had planted in April. After planting about 800 seedlings, it takes a little while to get through them, so I ended up watering them twice, but even so, we lost about 300 seedlings.
And on top of that, growers feared the pandemic would mean customers wouldn't show. So many Americans were just staying put, sheltering at home. And changes would need to be made for those who did stroll through the groves.
This year has been really kind of an upside-down year. The infection rates started skyrocketing in October, so then we had to make more readjustments accordingly for the safety of our workers and, of course, our customers. Up until this point, we did have horse-drawn hay wagon rides, but unfortunately this year we felt that we could not do that this year.
I bring in some pre-cut trees from northern Minnesota to add to the trees that we grow, because I can buy trees that I can't grow here. When COVID hit, it's like, are we even going to have a sales season? And I thought, I'm going to have to eat an awful lot of pre-cut trees because, once you've got them cut, you've got a limited time to get them sold, and they're not worth very much on the 26th of December.
But just when it looked like the nation's growers were going to be facing year-end balances that made lumps of coal look good, a surprise arrived as Thanksgiving neared. Around that time, as Dr. Seuss might have said in a far better way, the growers paused and put a hand to their ears. And they did hear a sound rising over the fields. It started in low, and it started to grow. It was cars and trucks, lots of them, coming from afar, full of children, parents, and Granny and Gramps besides.
Unofficially, we opened the weekend before Thanksgiving. We weren't planning on it, but there was people coming in and we couldn't hold them back.
When we opened at 10 o'clock Friday morning, we had cars parked both directions from our lane about a quarter mile each direction, which we've never had before.
And these mask-wearing visitors' sounds weren't sad. Their sounds sounded glad. Everyone in the grove, the tall and the small, was hunting without any sadness at all. COVID hadn't stopped Christmas from coming. It came. Somehow or other, it came just the same. And the tree growers, with their boot-clad feet not even crunching in snow, stood puzzling and puzzling. How could it be so? The mask wearers came without grumbling. They came without pride. They came without the usual cocoa, cookies, or rides. And the tree families puzzled and puzzled till their puzzlers were sore. Then the growers thought of something they hadn't before. Maybe Christmas and other religious holidays, they thought, doesn't come with a roar. Maybe Christmas, perhaps, means a little bit more.
People really want to get out. They needed to get out, and they can come outside and feel safer. And they had a chance to have a new experience. So we began to anticipate that we might have not just an average season, but it could be above average.
I think people are very appreciative more than ever this year. I think with this virus, I think has really actually taught us all a lot. And, we can't take things for granted, and we got to be more thankful for the simple things in life.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
Exports picked up and took the corn market with it. March wheat lost 6 cents, while the nearby corn contract added 14 cents. An Argentine worker strike combined with dry weather and a run on soy oil pushed soybeans through the $12 resistance threshold, resulting in a 60-cent gain. January soybean meal skyrocketed $25.20 per ton. March cotton expanded $2.96 per hundredweight. Over in the dairy parlor, January Class 3 milk futures shed 68 cents. An up week in the livestock sector. February cattle improved $1.55. January feeders added 67 cents, and the February lean hog contract jumped to 67. In the currency markets, the U.S. dollar index lost 95 ticks. January crude oil increased $2.34 per barrel. COMEX gold expanded $41.70 per ounce. And the Goldman Sachs Commodity Index increased nearly 13 points to finish at 406.95. Now here to provide insight is one of our regular market analysts, Arlan Suderman. Hello, Arlan.
Glad to be back with you once again.
Good to have you here. And we're going to start with wheat. That was the winner last week. I mean, it had a great Thursday, Friday. And then Monday came, and it had a case of the Mondays that it just couldn't shake. There was a little bit of pull along with corn. In your area, between the two of us, it's still dry. South of you, still dry. How come that's not helping the market right now, the weather?
It's tough to feed the bull every day with dryness in the plains, dryness in the Black Sea for that region this time of year. We really need to get probably another 30 to 45 days down the road before traders are usually willing to trade that kind of dryness and have a better feel for how the wheat is getting through the winter and what the outlook is for the spring. I might add that right now the outlook is leaning dry for the plains going into the spring, although looking a little better perhaps for moisture for the Black Sea region.
So the Black Sea region, you mentioned Russia. They're in the neighborhood over there. Last week, part of it was a tax issue. Is that still being talked about, or is that just a ruse to try and raise some prices?
Yeah, it's been rumored for quite some time as something that Russia may use to try to limit exports. And the market rallied on that. And then when the government made it official and said, yes, we're going to have import or export quotas and export taxes starting February 15th to June 30th, the market fell, a typical case of buy the rumor, sell the fact. Then we got some support again later in the week when it was reported that Russia was slow walking the paperwork on exports that are supposed to go out ahead of February 15th. That kind of got the bulls back and looking at with some perspective once again.
Slow walking the paperwork. That's a good one. What are you hearing about people making sales? Are they holding right now?
Yeah, most of the wheat crop from this last year is now in the commercials' hands, out of the farmers' hands. They are making some sales into this, but one of the things, and this applies to really all the ag commodities, particularly the grain and oil seeds, once we get this close to the change in the tax year, farmers just kind of prefer to focus on the holidays and not get any more income on the old tax year and wait till after the 1st of January.
Well, that's not the case necessarily in corn. Mexico, China, Japan, Taiwan, and the unknown buying U.S. corn this week. Is this all export driven? And if it is, why?
Yeah, the buyers are still looking to buy. In fact, if you look at our ethanol plants, they've got to pull better than roughly 100 million bushels pipeline. Livestock's even more than that. It's just that the farmers don't like to sell when you get this close to the 1st of the year. Or if they do, it's on deferred payment till after the 1st of the year. And they're kind of bulled up. But we do have good export demand. All the focus has been on China. But our non-China customers have been doing pretty well buying from us as well. Export sales for corn aren't the problem. Export shipments are. Soybeans, export sales and export shipments are both kind of exceeding the pace that USDA would expect us to be on to hit their target.
So if you mentioned trying to not try to take too much more income in this year. But man, it's kind of hard to walk away from a price that's back at 438 or 430. Yeah, 438, 437 and a half is what we closed on Friday here in March. You got to make a little sale right now, or are you holding?
Well, my advice to producers would be treat your farm like a business. And only one person hits the top of the market, and nobody else does. And so don't let greed here limit your ability to get marketing done, because when these things break, they tend to break hard. Do I think there's more upside potential? Yeah, certainly, especially for soybeans. But scaling in sales as we go higher, you can always do things for deferring income into the new tax year. So it depends on each producer and their situation, how much they've sold, what their financial needs are. But focus on the equity of your farm and building that equity and protecting that equity. You'll never go out of business locking in profits, and keep some flexibility then in whether it be through some re-ownership strategies or whatever, in case things do continue to go higher.
That was a version of the old Walt Hackney line. It's hard to lose money taking a profit. I like that, Arlen. In the soybean market, you want to talk about profits. Now, 60 cents sounds like a lot. Percentage-wise, that's a 5.1% rise. The question always is this a wave? Is this the beginning of 13, 14? Where are we headed, and why?
Well, history doesn't always repeat itself, but history does tell us that soybeans don't tend to spend much time in the $11 or $12 range. They either turn around quickly or they shoot right on through. And so from a historical standpoint, that increases the odds that we're just going to shoot right on through to the $13, $14 range. You've got to have some fundamental support behind that. There are plenty of things that could give us that fundamental support. USDA could always throw a wrench in things with a surprise upward adjustment in the size of the crop on January 12th. That's not expected. That's always a possibility. But right now, there's a long list of things that could further tighten our stocks and be friendly to prices.
I think I saw this week USDA is usually about a 50-50. What they do, rise or add to a crop, take away from a crop. It's just a matter of what may happen. Given the pattern of the last couple of reports, it's been cutting that. Do you buy that maybe that crop is going to be smaller come January?
Yeah, you're right that statistically they could go either way in January. As a former agronomist, my agronomy training tells me that there's a higher risk of those yields going down some more because of the dry finish that we had and the rapid dry down of the crop that we had.
All right, I got a Twitter question here I want to get to, Arlan. You're a big deal on Twitter. You saw this one already. This one came from Gary and Wilton, and Cyclone fans absolutely have noticed your Wildcat mug, by the way. Brazil is forecasting 134 million tons of soybeans this year. That is 12 million tons above their largest production. If this production estimate continues, how soon before our prices are affected? Or will the forecasted drought for 21 in the U.S. protect our prices?
Now, first of all, let me congratulate the Cyclones on a tremendous football season this year. Well deserved, they did it well. Now, as far as the question goes, our estimate from our Brazil team right now is 133 million metric tons. So that's not much different than the 134 that he said. Things stay tight even with that because China is basically using up our stocks ahead of the Brazil crop being available. We don't have a lot of similar analog years to look at. 2013 would be one of them. And in that year, we kept stocks tight and kept prices well supported right on through the marketing year. And we didn't even see our lowest stocks until I think is the October report the following year. So while there's no guarantees that we're going to repeat, there's certainly a lot of reasons to believe that this market's going to stay well supported as long as we stay tight, particularly if Argentina has the weather pattern that is now forecast and they continue to have the political and economic problems that make it tough for their crushers to meet commitments on meal and oil.
Crush has been a big story this week as well. I need to get to livestock. Cattle on feed report came just an hour before we recorded today. What did you take away from the report?
Yeah, nice boring report, pretty much as expected. But it does say something. COVID has really changed our seasonalities this year. When COVID hit in the spring, we really dropped back in our placements because we're trying to slow animals down because of problems at the processors. And then we saw big placements and we kind of caught up. Now they're slowing down once again. Still a lot of numbers. Last November was a lot of cattle. So still a lot of numbers are equal with that. But I think the industry is glad to see that we haven't built on those supplies, and it provides some support for the feeder cattle market.
See, on feed 101, placed on feed during November 91. That's very close to what the market was thinking was going to happen. You mentioned COVID. We're right in front of this holiday. A lot of the shoppers have done their work or they're about to do their work this weekend. Is that pipeline sufficiently filled up for whatever happens after the first of the year with us not being able to travel around or maybe another lockdown of some kind?
Right now, it seems to be well supplied. Part of that is because the supply is backing up from California lockdowns and New York lockdowns, restaurants and food services. So that's a real concern going forward. In fact, of building up of those meat supplies. We had one regional packer in the Southern Plains that shut down for a day, rumored to be because of this backup supplies, couldn't confirm that. So that's a concern going forward. I think there's optimism on the board that the vaccine is going to help fix that as we get into the second quarter and beyond. And we may have some contra-seasonal strength later in the year when we're normally weak in our prices.
In the hog market in 30 seconds, Arlan, that one again this week rose. Is that a pipeline issue or something else?
Yeah, it's the same pipeline issue. We're going to see some erraticness. We should see another good year of exports to China, but slower than this last year. One of the concerns is China is doing things to discourage the consumer from wanting to have possession of imported meat right now. And that may ultimately end up hurting us.
Are you holding hogs right now if you've got them, knowing what it's done the last 2 weeks?
Hogs, I think, are a market, the meat industry, we particularly have to approach it as the business approach, risk management, try to lock in growth and equity when we can.
All right, Arlan Suderman, good to see you. Thank you so much. We'll continue that discussion in a moment. Thank you, sir. That will do it for this installment of Market to Market. We will talk more in Market Plus. I'm not giving you a line, so join us. Find it there on our website at markettomarket.org. We're posting stories, photos, and questions on our Facebook page every single day. Type in Market to Market Show on Facebook, and you'll see what you've been missing. The more you like, the more you see. Next week, we'll look at a North American crop trying to crack into your holiday plans. Thank you so very much for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.